Have you guys been thinking about the IPO market at all?
Yeah, it's hard not to think about it with everything that's going on. Obviously, for a very long time, uh, Coinbase is pretty much the only example of a model company that's setting a very strong benchmark. But of course, Circle's recent success in the public markets has been a very clear signal that there is a huge investor appetite for crypto companies, more broadly. And I'd say the way that we view going IPO is sort of as more of a tool in the toolbox versus an end state. When we're building the company, we're really thinking about building Phantom into this generational company with generational impact and really play a huge role in bringing crypto mainstream. And you know, going IPO or going public or accessing public markets is sort of a tool in the toolbox to do that. And so that's how we view things. But when internally, I think we do measure ourselves, I think, in a lot of the same ways that a public company might in terms of operational maturity, profitability, revenue quality and business quality. And so, yeah, I'd say, we definitely are measuring ourselves up to the same standards as a public company. But whether or not we take that leap is more of a broader strategic decision about how we can get to this end state where, we're actually bringing crypto mainstream.
Yeah, I mean, Brandon just alluded to this. I think there's like a couple of key reasons to go public as a private company. One of them is access to capital markets, and then another is operational maturity. And we're in this really fortunate position where we don't really need the former. There's probably a great example company would be something like Stripe, where it's like when they need access to capital, they go and do a fundraise and they raise it, and they've got a lot of phenomenal investors out there that are really happy to be a part of that. For us, we do talk a lot about the latter, though, which is the operational maturity. And I think companies like Coinbase have blazed the trail here, as Brandon said, where they've demonstrated and then they help kind of give us some signal in terms of what the public market and public investors respond to. And I think Coinbase, I'm biased, but I think they've built a tremendous business over, a decade and a quarter or so. And they, as a public company, have really put a big emphasis on revenue predictability, diversifying revenue streams. So, like, of course, those are things that we measure up ourselves against. Even though we're not a public company, we try to think through that lens, like how would the public market react to this? So, to Brandon's point, we certainly think about that operational maturity as that's where we're at in our growth stage. Does that mean we're kind of itching to go public on the tail of Circle and Figma and these recent really impressive public offerings? No, I don't think that really impacts our timing too much.
So you just don't want to sum up. Yeah.
Well, yeah, I mean, yeah, there's just to maybe state the obvious, there's huge, there's a lot of operational complexity that gets added into a company once you take that step. From a reporting and compliance perspective, and from a functional manpower perspective, and all of that. And so I think for as long as we can not necessarily take on those extra burdens and focus all of our attention and resources into building the best business possible, I think what we're going to do. But yeah, definitely something we're keeping an eye on for sure.
It's interesting to hear you characterize it that way, because I think in DAT world and like SPACs sort of starting to return in the crypto world a little bit too, it can feel at times like going public is like a feather in the cap and a thing that you should do in crypto to kind of prove your legitimacy. But if you look at the broader tech world, there's a lot of private companies that could and maybe even should, depending on who you ask, have gone public a long time ago and just don't want to for various reasons. So it's like there's a maybe more mature version of crypto where it's like just because you can go public doesn't necessarily mean you absolutely should make that decision.
Yeah, I mean, as you say that, Jack, it reminds me of, this is kind of like when I was getting my start in tech in the 2010s, when I first moved to San Francisco. I feel like there was this moment in time where it almost felt like fundraising was the feather in your cap, that was the gold star, which is actually like a really, that's not a good thing. Like if you're a founder, if you're an early startup team, you have like a mission and a vision that you're going up against and trying to accomplish and deliver to your users. And then there's like, how do you keep gas in the tank? And that's what the fundraising is. Like it really is just, it's a resource that you need in order to build the thing and deliver the thing you want to do. And we're really fortunate. We have a tremendous cap table, like, you know, one of the more impressive cap tables I've ever seen. And that's not the point though. Like it's great that we get to partner with those people and get to work with them on building what we're building. But the point is what we're building. So that's definitely where we keep our focus.